Here's a summary of 11 trading strategies and even more Tradingview indicators we covered in January, so you can have it all in one place. Let's dive in. This indicator shows two channels based on moving averages, a longer period channel, 200 by default for identifying main trend direction and serving as dynamic support resistance, and a shorter period channel set to 20 by default for entry signals. For simplicity, use green coloring for bullish conditions and red for bearish conditions, with periods set as shown on screen for optimal strategy setup. What's particularly good about this indicator is its self-sufficiency. It requires minimal additional tools beyond basic support resistance or trend lines. This is due to its dual-channel setup, where the longer period provides main trend direction and acts as major dynamic support and resistance, while the lower period is used for entries. The SSL channel by Mistrick is a versatile technical indicator that works across stocks, forex, and crypto markets. The indicator features customizable moving average types, SMA, EMA, VWMA, etc., option to consider price wicks, and automatic buy-sell signals when the channel changes color. It displays two channels with state highlighting and semi-transparent fill between the bands, generating alerts for trend changes. For long positions, take buy signals from the lower period channel only when it's positioned above the longer one, and both are colored green. If the signal isn't immediately clear, wait for a price breakout followed by a pullback, then enter when price shows rejection at the channel while maintaining the correct color and position alignment. For short positions, enter when the short period channel is below the long period channel with both showing red. Enter based on the shorter term channel signal. Exit trades either on opposing signals or at your predetermined risk-reward ratio. Since all markets behave differently even with identical settings, thorough backtesting and forward testing are essential before implementing this strategy. Results cannot be guaranteed if trading begins without proper testing. If you're patient enough, this strategy will give you most reliable entries. It's worth mentioning that this strategy works best in trending markets and can look quite messy while price is in the range. That's why patience is key here. If you prefer trading with more confluences like me, you can add another tool to confirm market sentiment. I use the Market Sentiment Fear and Greed by Algo Alpha. We've reviewed this indicator in our previous videos, so here's a brief overview and use case. The Market Sentiment Fear and Greed indicator analyzes market psychology by calculating a sentiment score from volume and price data. It measures whether buyers, greed, or sellers, fear, are controlling the market. The indicator processes volume and closing prices to determine market direction, comparing up and down volume to establish bullish or bearish sentiment within a -1-to-1 range. Two display options are available. Sentiment True Mode shows raw data. Sentiment Normalized Mode displays simplified scaling. The indicator uses green for bullish and red for bearish conditions, with an optional gradient table showing sentiment strength. While the market sentiment indicator primarily shows overbought or oversold conditions, you can also use it to identify trend strength. As long as the price isn't in the -1 or 1 regions, use it as a long trade entry confirmation when it's green and short when it's red. The indicator also excels at spotting divergences. To combine it with the SSL channel indicators in the strategy, I recommend using these settings you see on the screen. Let's recap the entry rules when combining both indicators. For longs, take buy signals from the lower period channel when it's above the longer one. Both channels are green, and the market sentiment indicator confirms bullish direction. For shorts, enter when the short period channel is below the long period channel. Both show red, and market sentiment confirms bearish direction. For a cleaner chart, you can remove one of the channels. In this case, I recommend setting the period on the Fear and Greed indicator higher than the channel period and take trades when the SSL channel signals align with the market sentiment indicator. This indicator is a comprehensive technical analysis tool that combines multiple advanced features for market analysis. The indicator draws two sets of trend lines by connecting pivot points, a primary set with longer look-back periods and thicker lines, and a secondary set with shorter look-back periods and thinner lines. These trend lines can be drawn from either price wicks or real bodies, with customizable appearance options, including line styles, colors, and extension lengths. A key feature is its sophisticated support and resistance zone detection system that operates across 2 different time frames. Instead of simple lines, it creates zones around these levels using fractal patterns and volume data, providing a more nuanced view of potential price reaction areas. The indicator incorporates a trend candle system based on Heikin-Ashi calculations derived from TTM trend bars, which helps visualize price momentum through color-coded candles. It also features a trendline break detection system capable of tracking up to 10 previous trend lines, though this functionality is noted as needing optimization. Volume plays a crucial role in confirming significant levels, with the indicator using moving averages of volume to validate its signals. The code demonstrates careful attention to handling edge cases and offers various visualization options to accommodate different trading styles and preferences. It's called Trendlines 2X by Ledge MC. While the indicator may appear complex at first glance, I'll show you how to use it effectively in a profitable strategy. We'll focus on specific features rather than enabling everything at once. Let's configure the setup using the Settings tab. We'll use the BTC/USD 1-hour chart. To determine timeframe 2, set it to 3 or 4 times higher than your current chart resolution. In this case, we'll set it to 4 hours. This ratio works for any timeframe. For example, if you're trading on a 15-minute chart, set timeframe 2 to 1 hour. Enable support and resistance zones for both timeframes. You can optionally enable trend candles for visual color confirmation. Disable secondary trend lines to keep our chart clean and clear. Set draw lines to real bodies. For the look-back length period, while the default 20 usually works well, we'll use 28 for this setup. Keep in mind, these settings are just one of many possible configurations. If you discover settings that work better for your trading style, that's excellent. Now let's look at the first trading approach, reversals. These can occur both as local reversals during pullbacks within a trend or as major trend reversals. The principle remains the same. Watch for price rejection at higher time frame key support and resistance levels, followed by a breach in the opposite direction. You can add an oscillator to confirm divergence for additional confidence before making decisions. Enter when price breaks the established trend line. Remember, more touch points on a trend line typically indicate stronger potential moves. If you have trend candles enabled, watch for red bearish high volume candles, signaling seller control. Classic reversal patterns like head and shoulders can add another layer of confluence. Notice how price often retests recent resistance levels and gets rejected, another favorable signal. After the initial breakout, look for entries on pullbacks. The power of this indicator becomes evident when price returns to test a trend line after 2 touches and gets rejected. At these levels, you'll often see multiple support lines and higher time frame areas converging, creating strong reaction points. Adding a 50 EMA provides another dynamic support level to validate your setup. These patterns repeat consistently. Patience is key, along with having a well-planned system for entries and exits. Let's examine another example. The price makes multiple touches along the trend line here, then we observe a clear breakout, followed by a retest of the level. After another rejection at this point, the price continues its established trend. This indicator, called Bollinger Bands on MACD by Dreadblitz, which we'll refer to as BSM throughout this video, combines MACD and Bollinger Bands concepts by uniquely applying Bollinger Bands to the MACD line instead of price. The calculation is straightforward. It uses a faster EMA, 8, and slower EMA, 26, to create the MACD line, then adds Bollinger Bands using a 9-period standard deviation and 0.8 multiplier. These tight bands effectively identify momentum shifts. The visual signals are clear. When MACD breaks above the upper band, it turns green, showing strong upward momentum. When it breaks below the lower band, it turns red, indicating downward momentum. Blue coloring shows normal conditions between the bands. This differs from traditional indicators as it focuses on extreme momentum moves rather than simple crossovers, and shows momentum volatility instead of price volatility. Traders can use it for trend trading on band breakouts, counter-trend trading at extreme readings, or as a momentum filter. However, like any indicator, it can produce false signals. That's why we'll combine it with another indicator that identifies key support and resistance levels based on both price action and volume, which we covered in our previous video. The support and resistance high volume boxes indicator is a tool designed to identify key price zones where high trading volume occurs, often indicating significant support and resistance levels. By analyzing volume data alongside price pivots, the indicator highlights areas of interest where price action is likely to react, either holding these levels or breaking through them. Instead of relying solely on price data, it uses a volume-based function to differentiate between high and low volume levels, allowing for a more accurate depiction of critical zones. The tool also adapts dynamically, using adjustable parameters like the lookback period, volume filter length, and box width to cater to different trading styles. The visual representation includes shaded boxes at support and resistance levels, color-coded to reflect volume intensity. These boxes adjust as new data becomes available, and the indicator tracks whether these levels hold or are breached. Breakouts are marked clearly, with additional labels indicating when resistance turns into support or vice versa. After understanding how these indicators function, let's explore their practical application. We'll examine one powerful configuration among many possible combinations, which will help you customize settings for your specific needs. For more frequent trading opportunities, configure the high volume boxes indicator with a 16-period lookback. In the BSM indicator settings, labeled in Spanish, set Media Rapida, fast average, to 7, and Media Lenta, slow average, to 15. While I'm demonstrating this on a 1-hour BTC USD chart, these principles can apply to any instrument and time frame. The strategy relies on diamond signals appearing when price rejects from key price and volume levels. Entry confirmation comes from the BSM indicator. For long positions, wait for price to retest support, a green diamond to print, and the BSM to cross upward and turn green, signaling strong upward momentum. For shorts, look for diamonds at resistance levels, with BSM crossing down and turning red. This aggressive configuration yields more day trading signals, but increases false positives. For swing trading, consider extending the parameters. Set high volume boxes lookback to 30, with BSM settings at 15 for fast and 30 for slow averages. As this is a trend-following strategy, we'll use the Best Cloud All MA by David as our primary trend filter. This indicator helps us ensure we're trading in the direction of the overall market momentum. The Best Cloud All MA is a versatile TradingView indicator that creates a dynamic cloud formation using two moving averages. Its flexibility comes from supporting multiple moving average types, like EMA, SMA, VWMA, and Hull MA. The indicator generates a cloud between two moving averages, turning green when the faster MA crosses above the slower MA, bullish momentum, and red when the faster MA drops below the slower MA, bearish conditions. Price bars can also change color to reflect the current trend direction. For quick trend identification, it places green triangles below the price during bullish crossovers and red triangles above the price during bearish crossovers. Its primary strength is adaptability. This indicator will ensure we only take trades that align with the broader market trend, reducing the risk of counter-trend trading. Now, our main strategy indicator is unique and stands apart from traditional auto trendline indicators available on TradingView. Despite its unconventional approach, it proves highly effective in identifying valid trendline breaks, confirmed by the RSI. This indicator is designed to help traders identify potential breakout points, using pivot-based trend lines on the relative strength index, similar to the way trend lines are used on price charts. Applying them to the RSI can provide valuable insights into market direction and momentum. This indicator operates using a pivot-based system that identifies swing highs and lows on the RSI in real time. It then generates trend lines based on these pivots. The breakout alerts provided by this tool are intended to serve as additional confluence for traders rather than standalone trading signals. While breakouts are detected whenever the price crosses these trend lines, no additional conditions are applied to refine the alerts, allowing the trader to interpret them in the context of other analysis tools. A breakout is confirmed if the RSI moves above or below the trend line by a defined threshold, which can be adjusted according to your preferences. Repainting can be enabled for immediate alerts, or it can be turned off, with alerts generated only after a candle has closed. It's called RSI Trend Lines, with breakouts by Hoan Getty. Let me show you how we'll use these two indicators together to identify and trade market trends. Use the exact indicator settings shown on screen. While you can adjust these settings to suit your trading style, make sure to thoroughly backtest the strategy before entering any positions. For long trades, first confirm the bullish trend using the green cloud, which indicates that the overall market momentum is upward. Then, wait for the RSI Trendline Breakout indicator to signal a breakout in the direction of the prevailing trend. For short trades, apply the same logic in reverse. Look for the red ribbon on the best cloud all MA, which signals a bearish trend, and wait for the RSI Trendline Breakout to confirm the downward momentum. We recommend using a fixed risk-reward ratio of 1 to 1.5 or 1 to 2 to ensure potential profits outweigh potential losses. This means that for every dollar risked, you're targeting $1.5 to $2 in profit. Consider placing stop losses just beyond key support or resistance levels, and explore using trailing stops to protect accumulated profits during strong trend moves. The Adaptive Money Flow Index, MFI, with K-means clustering, combines traditional MFI calculations with statistical clustering techniques to create a dynamic market analysis tool. Despite its marketed name suggesting AI capabilities, it actually uses K-means clustering, a basic statistical algorithm, rather than artificial intelligence or machine learning techniques. The indicator processes price and volume data through standard MFI calculations, then uses K-means clustering to dynamically adjust the traditional overbought, neutral, and oversold levels that are typically fixed in a standard MFI. By default, it analyzes 300 bars of historical data and performs 5 clustering iterations to determine appropriate threshold levels for current market conditions. The clustering process involves taking initial reference points, grouping data based on distance to these centers, calculating new averages for each cluster, and repeating this process multiple times, along with bullish and bearish triangle markers indicating reversals. The indicator includes customization options for the MFI calculation period, historical data size, clustering iterations, and initial threshold levels. You can choose between raw MFI values or an adjusted version that maintains fixed reference levels while adapting to market conditions. This statistical adaptation approach, while not AI-driven, aims to provide a more context-aware version of the traditional MFI by automatically adjusting to changing market conditions instead of using fixed threshold levels. The adaptive aspect comes purely from the clustering process that adjusts levels based on recent price action, making Adaptive Money Flow Index using K-means clustering a more accurate name for this technical indicator than its AI-marketed title. A practical trading strategy, using the Adaptive MFI indicator, can be built around its dynamic nature, combined with traditional trend-following tools. The foundation of this strategy uses the 200 EMA as the primary trend filter, working in conjunction with the indicator's trend classifications, shown as plus, 0, and minus symbols. For long trades, wait for price to be trading above the 200 EMA, while the MFI shows a plus symbol or transitions from neutral to plus. The optimal entry point comes when you see the bullish triangle signal. You can add another layer of confirmation by checking if the price has crossed above the 20 EMA. Short trades follow the opposite setup, looking for price below the 200 EMA with the MFI showing a minus symbol or moving from neutral to minus. Enter when you see the bearish triangle signal, ideally with the price crossing under the 20 EMA. For exits, the indicator provides natural points when the trend classification changes to neutral 0 from either direction. Alternatively, you can exit when an opposing triangle signal appears. Place your stop loss just beyond recent swing levels for protection. Remember that this indicator's adaptive nature means it adjusts to changing market conditions, so combining it with less responsive tools, like moving averages or static support and resistance, helps provide a more complete picture of market structure and potential trading opportunities. Combines the engulfing candle pattern with the Relative Strength Index, RSI, to generate trading signals based on price action and momentum conditions. It identifies bullish signals when a candle closes above the previous candle's open while RSI is in oversold territory below 30 level, or has been in that range within the last 3 periods. Conversely, it signals bearish conditions when a candle closes below the previous candle's open, while RSI is overbought, above 70 level, or was there in the past 3 periods. Buy signals are marked with green triangles below price bars, while sell signals appear as red triangles above them, labeled buy and sell, respectively. The indicator uses a standard 14-period RSI, combining two well-known technical analysis tools. The engulfing pattern highlights price reversals based on simple arithmetic comparisons between the current and previous candle, while RSI measures momentum by tracking the strength and velocity of price changes. Despite its name, this is not an AI-driven system. It follows a strict rule-based approach without machine learning, neural networks, or adaptive models. Its calculations are deterministic, meaning identical inputs will always yield the same outputs. You can use this indicator in combination with a trend filter, such as a moving average, to improve trade accuracy. For example, bullish signals could be taken only when the price is above a 200-period moving average, reinforcing alignment with the overall trend. Similarly, bearish signals could be validated when the price is below the moving average. Stop-loss orders could be placed just beyond the high or low of the engulfing candle, while setting profit targets at a 1.5 or 2 times risk-reward ratio. Additionally, you can enhance your entries by waiting for confirmation through volume spikes or secondary momentum indicators. Our next tool is called the AI Trend Navigator. The indicator uses the K-nearest neighbors (KNN) algorithm, a fundamental machine learning technique, to predict trend directions in price movements. It processes price data and generates two key lines, the KNN classifier line and the average KNN classifier line. KNN in this implementation analyzes a set number of closest historical price values. Default is 3, within a window of at least 30 periods. It then applies a smoothing function, defaulting to 50 periods, to create a more stable output. The indicator visually represents trends through color changes: lime for uptrends, red for downtrends, and orange for neutral conditions. You can also enable background coloring to highlight predicted trend directions. While this indicator does use a genuine machine learning approach, KNN is a basic pattern matching algorithm rather than an advanced AI model. It works by comparing current price behavior to past price movements and averaging them to estimate trends, making it more akin to an adaptive moving average than a self-learning AI system. The algorithm is static, meaning it does not continuously learn or evolve beyond its rolling data window. You could use this indicator alongside a trend confirmation tool, such as a higher time frame moving average or volume-based analysis, to improve signal reliability. A possible strategy might involve taking long positions when the KNN line turns green, while price is above a 200-period moving average, and entering short positions when the line turns red below the moving average. Stops could be placed just beyond the recent swing high or low, with profit targets set using a fixed risk-reward ratio. Confirmation from additional indicators like RSI or MACD could further refine entries and exits. Next up is AI Super Trend Clustering Oscillator. It combines the well-known super trend indicator with K-means clustering, a basic machine learning algorithm, to classify market conditions into bullish, neutral, and bearish categories. It calculates multiple supertrend lines using different ATR multipliers, defaulting from 1 to 5, and then applies K-means clustering to group these signals based on their relationship to price. On the machine learning side, K-means clustering is an unsupervised algorithm that organizes data points based on similarity. Here, it processes the differences between price and supertrend values, initializing 3 clusters using quartiles as starting points. The algorithm then iterates to refine these clusters, stopping once it reaches an optimal grouping or hits the maximum iteration limit. Despite its AI branding, the machine learning component is relatively simple. K-means does not adapt over time or learn market behaviors in a deep way. It purely identifies natural groupings in the supertrend signals without using predefined thresholds. This makes it more of a dynamic statistical tool rather than an advanced AI system. The indicator visualizes trends through an oscillator display, with blue shades indicating bullish signals and red shades for bearish, where intensity reflects signal strength. While it leverages a legitimate machine learning approach, its predictions are still fundamentally tied to traditional supertrend-based technical analysis, rather than cutting-edge AI forecasting. You can use this indicator alongside price action confirmation for trend-following entries. One approach would be to take long positions when the oscillator shows strong bullish clustering, dark blue, while price is above a key moving average, 100-period EMA for example. Conversely, short positions could be taken when the oscillator turns dark red and price is below the moving average. To refine entries, you could wait for pullbacks into a support-resistance zone before entering, setting stop losses beyond recent swing highs-lows and targeting a 1.5 or 2 times risk. Our next reviewed tool is called AI-powered Breakout with advanced features. The indicator is designed to detect potential market breakouts and breakdowns by analyzing historical price action. It calculates the highest high and lowest low over a set look-back period to establish key breakout levels, helping traders identify potential entry points. A core component of the indicator is an adaptive moving average, constructed using 2 exponential moving averages. This adaptive approach adjusts dynamically to price movements, acting as a trend filter to refine breakout signals. Additionally, the indicator incorporates pivot high and pivot low detection, enhancing confirmation by identifying significant price turning points. Despite its name, this indicator does not use artificial intelligence or machine learning. Instead, it relies purely on traditional technical analysis methods, such as moving averages, pivot points, and breakout level detection. The term AI in its title likely refers to its adaptive characteristics, rather than any actual AI-driven computations. You could use this indicator to enter trades when price breaks a key resistance level, while staying above the adaptive moving average, signaling a bullish breakout. For short trades, a breakdown below support while price remains below the adaptive moving average could indicate a bearish setup. Stop losses can be placed just beyond the breakdown level, with targets set using a fixed risk-reward ratio, or by trailing stops based on recent swing points. The Adaptive Money Flow Index, MFI, with K-means clustering, combines traditional MFI calculations with statistical clustering techniques to create a dynamic market analysis tool. Despite its marketed name suggesting AI capabilities, it actually uses K-means clustering, a basic statistical algorithm, rather than artificial intelligence or machine learning techniques. The indicator processes price and volume data through standard MFI calculations, then uses K-means clustering to dynamically adjust the traditional overbought, neutral, and oversold levels that are typically fixed in a standard MFI. By default, it analyzes 300 bars of historical data and performs 5 clustering iterations to determine appropriate threshold levels for current market conditions. The clustering process involves taking initial reference points, grouping data based on distance to these centers, calculating new averages for each cluster, and repeating this process multiple times, along with bullish and bearish triangle markers indicating reversals. The indicator includes customization options for the MFI calculation period, historical data size, clustering iterations, and initial threshold levels. You can choose between raw MFI values or an adjusted version that maintains fixed reference levels while adapting to market conditions. This statistical adaptation approach, while not AI-driven, aims to provide a more context-aware version of the traditional MFI by automatically adjusting to changing market conditions instead of using fixed threshold levels. The adaptive aspect comes purely from the clustering process that adjusts levels based on recent price action, making Adaptive Money Flow Index using K-means clustering a more accurate name for this technical indicator than its AI-marketed title. A practical trading strategy using the adaptive MFI indicator can be built around its dynamic nature combined with traditional trend-following tools. The foundation of this strategy uses the 200 EMA as the primary trend filter, working in conjunction with the indicator's trend classifications, shown as plus, 0, and minus symbols. For long trades, wait for price to be trading above the 200 EMA, while the MFI shows a plus symbol or transitions from neutral to plus. The optimal entry point comes when you see the bullish triangle signal. You can add another layer of confirmation by checking if the price has crossed above the 20 EMA. Short trades follow the opposite setup, looking for price below the 200 EMA with the MFI showing a minus symbol or moving from neutral to minus. Enter when you see the bearish triangle signal, ideally with the price crossing under the 20 EMA. For exits, the indicator provides natural points when the trend classification changes to neutral 0 from either direction. Alternatively, you can exit when an opposing triangle signal appears. Place your stop loss just beyond recent swing levels for protection. Remember that this indicator's adaptive nature means it adjusts to changing market conditions, so combining it with less responsive tools, like moving averages or static support and resistance, helps provide a more complete picture of market structure and potential trading opportunities. Let's look at our first indicator. We've covered it before in detail, but I'll give a quick overview to make sure everyone understands how it works. The Support and Resistance High Volume Boxes indicator is a tool designed to identify key price zones where high trading volume occurs, often indicating significant support and resistance levels. By analyzing volume data alongside price pivots, the indicator highlights areas of interest where price action is likely to react, either holding these levels or breaking through them. Instead of relying solely on price data, it uses a volume-based function to differentiate between high and low volume levels, allowing for a more accurate depiction of critical zones. The tool also adapts dynamically, using adjustable parameters like the look-back period, volume filter length, and box width to cater to different trading styles. The visual representation includes shaded boxes at support and resistance levels, color-coded to reflect volume intensity. These boxes adjust as new data becomes available, and the indicator tracks whether these levels hold or are breached. Breakouts are marked clearly, with additional labels indicating when resistance turns into support or vice versa. This indicator works well independently, but adding our second tool helps reduce false signals and improves both entry timing and trade management. Combining these two indicators creates a more reliable trading approach. Our next script is called RMI Trend Sniper by TZAC88. The RMI Trend Sniper is a Tradingview indicator that combines the Relative Momentum Index RMI and Money Flow Index MFI to identify trending market conditions. It creates a dynamic range around the price to help traders spot potential trend changes by calculating the average of RSI and MFI values to measure market momentum. Positive momentum occurs when this average crosses above the upper threshold while staying above the lower threshold, with confirmation from a short-term moving average. Negative momentum is identified when the average drops below the lower threshold with the same confirmation. The band's width automatically adjusts to market volatility using the average true range, ATR, while small markers appear at the bottom during bullish signals and at the top during bearish signals. Additionally, the indicator changes candle colors to match the current trend. With its dynamic range calculation, the RMI Trend Sniper adapts to different market conditions, filtering out noise and highlighting significant trend changes. Look for confluence between the two indicators. High probability setups occur when price reacts to a support or resistance level, highlighted by the high volume boxes indicator, and the RMI Trend Sniper confirms the trend direction with its color-coded band and momentum signals. For long trades, ensure the price is at or above a key support level, with the RMI band turning blue and bullish momentum confirmed. For short trades, ensure the price is at or below a key resistance level, with the RMI band turning red and bearish momentum confirmed. Place your stop loss just below the support zone for long trades or just above the resistance zone for short trades. Use the width of the RMI band, adjusted by ATR, to gauge market volatility and fine-tune your stop loss and profit targets. Exit the trade if the price breaks back through the key support or resistance level, or if the RMI Trend Sniper signals a reversal by changing band colors or breaking momentum thresholds. By following these rules, you can effectively spot high-probability trades, reduce false signals, and improve your overall trading performance. In our previous video, we presented a multi-time frame volume strategy with UT bot alerts. Check it out here.